Before we look at the 5 reasons Bitcoin has intrinsic value, let's take a step back and talk about the difference between value and price. These two metrics are often confused. The buyer decides what is valuable to them, and they often base this on what they believe is the asset's intrinsic value. Price, on the other hand, is what you pay, and this is set by the seller. But for a buyer to pay the price, they still need to see value in that asset. Now let's focus on how value was assigned to the asset. First off, there is no law of nature that says this asset has to have this particular value or price. We as a group of individuals, also known as the market, decides what features or values are important to us, and this will change depending on what we are buying. If you're looking at a stock, you may want to learn about the company's P&L. Does it have growth potential? Does the management team have previous success? How popular are its current products or services, etc.? In the case of cryptocurrencies, you may want to know a coin's level of decentralization. Can more coins be printed? And who controls the printing? Can it store value? Using those metrics, each individual within the market will decide what they are willing to pay for those features or values. In Bitcoin's case, these are the 5 reasons it has intrinsic value. Number 1. Scarcity. There are only going to be 21 million Bitcoin. Bitcoin's fixed supply means that it can't be devalued by creating more Bitcoin out of thin air. Number 2. It cannot be counterfeited, also known as a double spend in Bitcoin terms. In the current monetary system, banks would be responsible for making sure that bad actors can't double spend. But in Bitcoin, proof of work and the miners protect 640 million past transactions from being changed. Number 3. It's easily transferable. You can send Bitcoin to any other Bitcoin address around the globe and have it settled in 10 minutes. Number 4. It cannot be confiscated. Banks and governments cannot claim it the way they did in Greece, unless they find or you have no control over your private keys. Remember, not your keys, not your Bitcoin. Number 5. It's a store of value. Now this is a contentious point for some. What they often cite as a rebuttal is price volatility. But the problem with that is, a stable price does not necessarily make it a good store of value. The US dollar is a great example, as it consistently loses value over time. Second, Bitcoin is volatile when you think in timescales of 1 day, 1 month or 1 quarter. People viewing Bitcoin on this timescale often lose their money. Bitcoin is not a get-rich-quick scheme. But if you view Bitcoin on a year or longer timescale, its ability to store and grow value is very real and unmatched. Bitcoin's volatility is the price you pay for the performance you get.